concerned. But shifting focus to the sugar sector then, rating agency ICRA anticipates that an above normal monsoon will lead to increased cane acreage in the states of Maharashtra and Karnataka. This, coupled with better yield expectations in key sugar sowing states, could push sugar prices higher by nearly 15% this year. In fact, sugar output higher by 15% this year. Moreover, ICRA estimates that the revenues of integrated sugar mills could grow by as much as 6 to 8% in FY26, supported by firm domestic sugar prices, higher sales volumes, and increased ethanol production from distilleries. To understand this in greater detail, we are now joined by Mr. GIRISHKUMAR KADAM, Senior Vice President and Group Head at ICRA. Mr. Kadam, thank you so much for taking your time out and joining us here on ET Now. Monsoon so far has been 10% higher than long period average, and this is likely to be positive for the sugar sector because sowing is expected to be higher. Production this year and next year is also expected to be higher. If you can put that into numbers for us, how much production increase are we expecting for the sugar sector, and consequently how much revenue ramp up could we see for the entire sector?
Yeah, thank you, Ashesha. So we are expecting an increase of almost 15% in the sugar output for the upcoming sugar season, which is sugar year 2026, which will start from October onwards till next, November 26. This year, this SY25, the expectation on the sugar output is about 29 million metric tons, which is likely to go up to 34 million metric tons on a gross basis. And this is precisely because of, the better, cane availability in states like Maharashtra and Karnataka, and which is again because of, better monsoon, which prevailed particularly last year, FY25, which was almost at 108% of the long period average. And result of that, the cane availability is looking far better this year, and this will get reflected in the better sugar production in the upcoming sugar season. So these are the broader factors. Just to correlate these things for the previous year, with the current sugar year, which we have seen, in fact, a decline in terms of the sugar output. 29.6 vis-a-vis 34, which was there in sugar year 2024. And why there was a decline in the current sugar year 2025, that was precisely because of the less rainfall which was there in FY24. So better monsoon obviously will have has a cascading effect in terms of the better sugar production in the upcoming season. So that's the on the sugar output side, and certainly this will have a positive impact for a sugar sector as a whole in terms of the revenue growth. On the sugar sector, we track 12 entities as part of the coverage, and the overall revenue, for the sugar mills, almost 12 sugar mills, and many of them are listed, is likely to go up almost 5 to 8% in the current financial year, FY26. Again, thanks to the better volumes on the distillery side, and also more importantly, the firm sugar price environment. The distillery volumes are looking better. Obviously, on a YOY basis, as you are aware, there was a diversion cap which was there in December 23, which impacted the first half of the last fiscal in terms of the distillery performance, and which is why FY25 the overall margin performance actually dipped. So on that front, and given the fact that that cap is not being there, and we are expecting a diversion of anywhere between 3.5 to 4 million metric tons this year. Based on our channel check, the distillery volumes are likely to be much better this year. On top of that, the sugar pricing environment is better. The sugar pricing continues to rule at about 39 rupees a kg, 38 to 39 rupees a kg, and we see that pricing to remain firm at least over the next 4 to 5 months till the start of the next season. Of course, the pricing environment on the sugar side will be a function of what kind of policy, clarity emerges, particularly on the sugar export side and also on the ethanol, pricing side. So obviously these will have its own impact on the sugar demand supply balance situation in the country and also on the pricing. But overall, as I mentioned, the revenue growth is likely to be about 5 to 8%, and we expect, the operating margins for the sugar mills on an aggregate basis to remain anywhere between 11 to 11.5%. So that's the broader commentary which we have on the output and also on the revenue and the profitability within the sector. Yeah.
So that's as far as output, revenue and profitability for the sector for FY26 is concerned. But since you're expecting production to rise, do you expect any kind of negative impact on retail sugar prices? I believe retail sugar prices currently stand in the range of 39 to 41 rupees per kg. Do you expect any downward trend over there because of higher production and consequent higher supply?
Yeah, so all that depends upon how the clarity emerges on the export policy and also on the ethanol pricing policy. The sugar exports up to 1 million metric tons are allowed. So any higher allowances on sugar export side may have an impact on the closing sugar stock, and it can soften the price environment, just on a illustratively speaking. Secondly, on the ethanol pricing side, in fact, if you look at the B-heavy molasses route and the sugar juice-based alcohol route, the alcohol pricing has not been revised for the last 3 years. And, there has been an ask from the industry to have that pricing revision because on the other hand, the cane pricing for the sector has actually gone up. So to that extent, it is impacting, the profitability in the distillery segment. And the ethanol pricing is somewhere, it's not reflecting the true cost. So if that pricing, let's say, is not revised, and if, let's say, if that has an impact on the divergence towards the distillery, sector, obviously it can lead to, higher amount of, the sugar stock, the closing sugar stock for the sector, and it can have a softening impact on the, the sugar prices. So the clarity on the exports, the clarity on the the ethanol pricing regime will play an important role in terms of the sugar pricing environment over the next 6 to 8 months.
Understood. So that's as far as pricing is concerned. But since you rightly pointed out, cane prices have risen, but consequent price increase in ethanol is not something that we have not seen over the last several months and years. In fact, especially juice and B-heavy based ethanol prices have not been revised for the last 2 years. So do you expect any kind of positive action from the government, and that perhaps government could go ahead and increase ethanol prices in the near future?
So I'm not the right person to anticipate on this particular question, but this is something which we understand based on our channel check with the issuers that we rate and also with our interactions with the industry. So there is a ask for particularly for the juice based and also on the B-heavy molasses based because that will also incentivize the sugar mills to divert. The base case expectation in our estimate is about 4 million metric tons of ethanols are likely to be diverted. So that's the base case scenario, and any negative deviations may have an impact on the sugar demand supply situation, as I mentioned earlier.
So we get that point completely. Sir, thank you so much for taking your time out and joining us here on ET Now and helping us decode what the outlook is for the sugar sector going forward and what it means for sugar retail prices in the domestic market. Thanks so much for joining us. But apart from sugar, several other commodities